FedEx just released its earnings, but the shipping giant recently made other news by taking an $891 million charge to drop the Kinko's name from its retail locations. It bought the copy office chain about 4 years ago for $2.5 billion. And now FedEx Kinko's is reinventing itself as FedEx Office. Here to talk about the company's transformation in the marketplace and the stock market is John Tantillo of Marketing Department of America and Daniel Schaefer, President of Schaefer Asset Management. Welcome, guys.
Good morning.
Good morning.
John, I have to start with you. They made this purchase 4 years ago. Huge, $2.5 billion. Why drop the brand?
Well, in brand speak, Charles, it's very, very easy. Less is more, and when 1 plus 1 is equal to 2, you simply drop one of the names. However, if 1 plus 1 is equal to 10, like ExxonMobil, what you do is keep the both names. So in this instance, it really made no sense to keep the name FedEx Kinko's. As a matter of fact, FedEx is a much stronger brand than Kinko's is. Think about it. Do you like the name Kinko's? Does anybody like the name Kinko's?
Dan, I love a man who wears stripes and polka dots, but you lost me a little bit. Okay, let's talk about the stock for a minute.
Sure.
They're taking an $891 million charge on this. How's that going to impact the numbers that are going to come out just momentarily?
Well, they already pre-announced that they're going to have this charge. I think it was $2.22 a share based on dropping the Kinko's name and restructuring this, whatever they have to do. I think that it's a great idea for them to do that. The name recognition of FedEx is a lot stronger than Kinko's, like you said. I think it's also good for morale for the company. But as far as the stock price is concerned, we're in a cycle that is a down cycle for this industry. We have the oil prices that are very costly for them. We have a slowdown in the U.S. economy, which is a slower movement of goods that they transport. Right. I don't think it's going to help the stock based on just dropping a name. I think it's going to help in the long run the company be more glued together instead of I work for Kinko's, you work for FedEx, but we're with the same company.
The street's looking for $1.47, but just I guess a couple of weeks ago, management actually lowered guidance. They cited oil prices. What's the impact going to be of oil and the U.S. economy? Which one is going to have the biggest impact, negative impact on the company today, and what sort of guidance do you expect from management?
Well, I don't know exactly what management's going to say. I don't know what they're thinking, but the oil is a big issue because they're in the transportation business of goods and delivery of packages. The other issue is the weak dollar. Now, everybody thinks the dollar's gotten a little stronger here. It's gotten a smudge stronger. Nothing big. The euro is still at 155, not 160. FedEx is an international company. Their costs of outside the United States are costing higher to do what they need to do and what they used to do, which is going to cut into the bottom line.
So I'm a shareholder of FedEx. I'm not looking for any silver lining today.
No, we're actually targeting a lower valuation on the stock, breaking below 80, which was its recent low, and it had hit its 200-day moving average several months ago, and it just pulled right back from it. So at this point, it's still in a downtrend.
Dan, John touched upon the esprit de corps at the company with the name change. Let's talk about consumers from the consumer end, because to me, I don't know, I thought Kinko's was a pretty strong brand name, and I think a lot of folks, associate Kinko's with the sort of things that they do. How do they rebrand themselves now with the public?
Well, if you take a look at Procter & Gamble and what they did about a year or two ago, they took over Gillette. And what they did was kept the Gillette brand for certain products. So if Kinko's had a strong product, like a strong photocopying service, then it would make sense to keep the Kinko's name to identify that product or service. But to simply keep Kinko's for the sake of keeping Kinko's because one likes it, I don't know about that. And do you realize, Charles, that 50% of the time that chief executives use are on branding issues? So this was a very well thought out plan.
You say it's well thought out, but when I hear FedEx Office, I'm thinking Microsoft Office. I don't even equate that to something that I would go. I mean, Kinko's was embedded, so
sure.
Could they have come up with a better name or a better title?
Absolutely not. First of all, when you think of FedEx, you think of service. Secondly, what you're speaking of can be easily solved by a great advertising campaign.
Sounds like you're lobbying for the job, by the way.
I certainly will. Well, I think it's a great brand. FedEx is a great brand.
If you got the job, what would you do? What would your campaign look like?
I would get one of my great advertising agencies and do a wonderful campaign and then use the internet, YouTube, make it viral, make it exciting, and get everybody on the street, even you, Charles, to talk about it, and you, Dan.
Listen, give us some examples of other companies that have done this. They've gone out and they bought these big brands only to drop the brand name.
Okay, well, in a similar situation, you have UPS, right? The UPS store. What your good friends over at Chase, when they bought Bank One, that's another. General Electric when they moved from RCA. So I mean, this is something that you see. Capital One and North Fork Bank. So this happens all the time. And like I said, what you want to do is you don't want to confuse the public. You don't want to confuse the target market. One brand is always better than two, except if you're ExxonMobil.
I appreciate the math lesson and the marketing lesson. Thanks to both of you guys.